Hello and welcome to Ask You for a Trend. I'm Josh Lipton, and for the next half hour, we're breaking down the trends of today that'll move stocks tomorrow. There is a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. Markets fighting to end a tough month on an upbeat note. The month of March was a tough one, we know, for investors, and the quarter headline trumps fast evolving tariff policy. We're going to check in on the top takeaways from Q1. Plus, President Trump's auto tariffs have customers and dealers spooked. We're going to hear from the former chairman of the National Automobile Dealers Association about what the effect on car prices could look like. And TikTok's days in the U.S. are numbered unless parent company ByteDance strikes a deal to sell the social media platform by Saturday, April 5th. We're going to tell you everything you need to know as that deadline looms. Well, President Trump's auto tariffs are set to take effect this week, with collections set to begin on April 3rd. As the duties are expected to raise prices, auto dealerships are gearing up to navigate cost-conscious buyers. Pohanka Automotive Group Chairman Jeffrey Pohanka joins us now to discuss. Jeff, it is great to see you. And I was reading, Jeff, you are actually a third-generation car dealer, Jeff. So you obviously, you know this business, Jeff. You know this market very well. I was curious, Jeff, what, if at all, you're seeing in terms of foot traffic? If there's been any differences in terms of foot traffic, Jeff, leading up to these tariffs, do you have any sense that people are trying to get ahead of these tariffs?
Well, car sales right now are booming, not just here. I'm in Philadelphia at a dealer meeting and throughout the country with most products. And a lot of our dealerships in the Washington, D.C. metro area, and there's a lot of chaos going on in Washington. And those dealers are experiencing really good sales level. Can we attribute that to tariff? Perhaps as part of the equation. Most likely, yes. We don't know to what level, but there's a lot of concern in the auto industry and on consumers also too, the impact these tariffs would have on the auto business.
So how these, Jeff, you now have to think through how these tariffs can impact your business. How do you try to model that out? How do you try to navigate that, Jeff?
Well, we'll take the boost in car sales. There's a speculation that this will boost used car sales, people trying to avoid the tariffs. We don't know what the tariffs will be. They're going to be announced in the next day or so. And, I'm hopeful that there'll be some resolution to them. In their current form, as promised, if they're long lasting, they would be damaging to the auto industry and the car sales volume. Absolutely. I'm hoping, because they're very serious in terms of their impact with our trading partners and industry in general, that there will be concessions from our trading partners to lessen the damage that they could cause. This is a big picture. This is high stakes poker, and we have serious trade issues, and they have to be addressed. And certainly the auto industry is a very important part or component of the world economy. And the president has identified automotive as a way to try to get maximum leverage to get concessions in general with our trading partners and to level the field, which in the long run might be beneficial to our economy.
I'm curious, Jeff, how many brands do you sell that are imports currently?
Well, what is an import now? I mean, General Motors sold more cars in China the past 10 years than in North America. So, it's a global economy. We have domestic brands, we have Japanese brands, we have Korean brands, we have European brands. We're a 106-year-old company. We have 23 dealerships, and we sell 11 different brands and multiples of some of those brands. So we're very diversified. Auto dealers are very adaptive to new environment. We've had a lot of shocks the past 10 years, and we'll be fine. We'll figure it out. But again, I think this is part of a global issue, and we're being used for maximum leverage. Look, if these things last for years, as promised, it would be very difficult. You have two cars, one made in the United States, one with tariffs, and then the tariffs come off, and you're left with a high-priced car with a tariff on it, amounting to some thousands of dollars. How are you going to sell that car that's a tariff car versus a non-tariff car? So a lot of uncertainties that we'll have to face when the announcement comes out. I'm hoping the manufacturers will be slow to react and see what's actually happening and not pass these costs on initially, so they can see really this whole thing settles in or settles out. Are our trade partners going to negotiate and look at the big picture? Or are they going to fight back I don't know the answer to that question.
Do those car makers, though, Jeff, do they have the margins to take that kind of hit? And if so, for how long?
No, very strong company like Toyota can withstand. They've promised that they're going to hold off. A weakened company like Nissan will feel an immediate impact. So not everybody will be impacted the same way. And a lot depends upon where their parts come from, where their final assembly is. It's kind of a complicated matrix. Every manufacturer will be affected in some way, some fewer than others. If some don't produce any cars in the United States or use a lot of imported parts, they would be affected much more than others.
What are your inventories like right now, Jeff?
Well, actually, there's some shortages. I mean, demand has been pretty good, even before the last month with the tariffs. So, there's pent-up demand. Springtime, market's better. The average car is 13 years old. They don't last forever. And, it's right now business is good, but they could cool overnight.
Even before these tariffs, Jeff, the threat of these tariffs, what has affordability been like in the U.S. auto sector? How would you characterize it?
Well, affordability is definitely an issue, because of inflation, supply chain issues, and also the cost to transition to electrification. I believe gasoline cars are subsidizing a lot of this transition to electrification. One thing to look at globally is the different markets. These car manufacturers are global manufacturers. And I was in China a year ago in November, and looking at the market there, the Chinese market's 10 million more cars than the United States new car markets, the biggest in the world. And the Chinese domestic manufacturers are pushing out all the other non-Chinese manufacturers. And that's been a very important market for many manufacturers in Europe, the United States, and Asia. And then you go to Europe, they're going 100% EV by 2035, which is impossible to achieve, but I'm sure the governments there will hold on as long as they can. And the United States is going to go eliminate all incentives, subsidies to EVs, and let the free market decide. These are all different markets. And now they have to deal with tariffs in the United States. So the manufacturers are really in between a rock and a hard place.
Jeff, really helpful insight and analysis there. Thanks so much for joining us today. Appreciate it.
Thanks for having me.
Well, as Liberation Day tariff worries mount, we're looking into concerns among the small business space. Elizabeth Gore, co-founder of Hello Alice and host, of course, of Yahoo Finance's upcoming new podcast, The Big Idea, joins us now to discuss. Elizabeth, it's great to see you. So listen, we're waiting on Wednesday here, Elizabeth. That's when, of course, we expect President Trump come out, announce this slate of reciprocal tariffs, Elizabeth. Ahead of that, I'm curious, how are small business owners feeling, Elizabeth? You're talking to them, of course, all the time. What's the vibe out there?
Yeah, howdy, it's good to be with you. So there's a real sense of nervousness. Folks are unsettled. They're worried about the cost of goods sold. We're seeing a lot of folks hold back on growth plans. They're not hiring that next person. They're not buying that next oven. They really want to understand how this is going to impact their unit costs.
Are they, Elizabeth, I'm curious, do you detect any differences when you're talking to small business owners? Listen, there's a lot of small business owners. Are there differences in terms of sentiment and how they feel right now, Elizabeth, between, different verticals, different industries, different sectors?
Yeah, the sentiment that is the same is the sense of uneasiness, that there's so many changes, whether it be the Small Business Administration, the tariffs, the capital is still expensive that they're going after. So there's a real sense of uneasiness there. There are different verticals of folks that are nervous. If you look at agriculture, if you look at anyone in the food services industry that are buying foodstuffs every day, those folks are starting to get a little bit nervous, more so about both export and import of cost of goods sold. So that's where I'd keep my eye on, is there going to be growth or not? And there's definitely a sense of unease. Also, Elizabeth, changes at the SBA, Small Business Administration. What are you hearing there? How are folks feeling about it? There's confusion. There's a lot of folks in this country with SBA-backed loans, grants, and they utilize the Small Business Administration for education, for business planning. So the fact that there are being cuts there are being jobs that are closing down, there's certainly a confusion and a wait and see on, are those resources still going to be available, critical resources to small business owners. Elizabeth, always great to have you on the show. Thanks for joining us. Good to be with you.
For more on navigating the world of small business, be sure to catch Yahoo Finance's upcoming podcast, The Big Idea, hosted by Elizabeth Gore. That will premiere April 24th at 12 p.m. Eastern. Well, stick around. Much more Ask for a Trend. That's right on the other side. Well, U.S. stocks claw back earlier losses as markets cap their worst quarter since 2022. We're here with the trading day takeaways. Yahoo Finance's Josh Schaefer. Josh,
it is the end of the quarter. We only get to do it 4 times a year, so let's zoom out, all right? I got Q1 market takeaways for us, sort of a look at where we're at 3 months into the year. This first one obviously stands out as something we've been talking about a lot, right? So the Mag 7 officially wrapped up their worst quarter against the S&P 500 since 2022. Remember, 2022 was obviously a bad year for a lot of big tech stocks, right? So it sort of had that vibe to it a little bit to start the year. It just has not been strong for the Mag 7. I'll take a look at that board quick too, and we can just see. I think what's interesting within this too is sort of how far off a lot of these stocks are from their 52-week high, right? We look at this Mag 7 cohort, about 20% or more from recent all-time highs that we've seen. So these stocks have taken a pretty big haircut to start the year. When we think about how big these stocks are, it's part of why the index is down to start 25 too.
And different puts and takes, right? I mean, it's like DeepSeek, I got growth worries, right? So now I guess if you're a big tech investor, now you've got earnings season, which will be here before you know it.
Yeah, earnings season comes up in a month, but what sort of stuck out to me last week, Vinu Krishna at Barclays, he downgraded S&P 500 target to 5,900. He said, I still like big tech. He takes Tesla out, but he said, I like the rest of big tech, but I don't see a near-term catalyst. He said, I think these are great companies. He's not saying don't own Apple for the next 5 years, but he's saying if you're looking just out into the next quarter, he's not really sure what we're going to hear in earnings season that turns this story around in the near term. So I think that's sort of an interesting thing. A lot of times when you talk tech, usually there's some events you can circle on the calendar. Maybe there's something expected out of earnings that can drive it forward. Right now, it feels like the catalyst just isn't really there. So maybe something can come a little bit out of nowhere and help out the sector.
And it wasn't all tech, which is Chinese tech. K-Web up 20%.
Yeah, Alibaba had a good quarter, right? There was plenty to like outside of U.S. tech, but U.S. large cap tech not doing great. All right, economic data souring, Josh. So really, this was kind of the story of the first quarter to me. As you take a look at this inflation chart, look at how we started 2025. Your 3-month annualized, so that's really just kind of only taking the first quarter. It's taking January, February, December right now. We don't have March yet. Inflation's ticking higher, right? And so you have sort of this inflation still sticky above that 2% target. Growth is slowing. People are talking about that term stagflation, where growth slows and inflation remains sticky, not usually a good environment for stocks. But I think just sort of the economic data coming in below expectations for the large part of the quarter seems to be what drove a lot of the macro action from where we're at this point.
And now speaking of economic data, big jobs report on Friday. How important is that for the market?
Yeah, so when you think about that story I just laid out, right, of bad economic data, hasn't been a great quarter, well, the jobs market's actually been okay, right? And so I think the large question right now would be, all right, if we're a little bit worried about economic growth, does the jobs market stay strong? So when you go into Friday looking for a 4.1% unemployment rate staying flat, if that unemployment rate starts to tick up higher, then I think your recession calls and things like that might start to get a little bit louder. And that's where we're going to go, Josh. Take 3, forecast falling. This one's actually on the rise. I shouldn't have wrote falling. This is Goldman's recession probability, and this is a big takeaway too. You look at where they entered the year, 15, 20%, that's pretty standard, right? And normally you would get 15% recession odds any given moment. That's kind of the historical average. They're now up to 35%. So Goldman's saying in a note over the weekend, we consider tariffs, we consider this higher inflation data as it is, this already slowing story, add in what tariffs could do to the economy. They're not feeling that great and necessarily about how that's sort of going to play out. And then flip to what that means for stocks. Goldman's now one of your lowest forecasted S&P 500 calls, 5,700. And you just look at this wide diversion of where people feel like the market could head sort of stands out to me.
And what explains the difference between these two?
Yeah, so when you take a look at sort of the bottom part here, this has become your stagflation camp, right? So Stifel was out early to start the year saying this, but Barry Bannister said, I don't think the second half of the year is going to be great for, or really 2025 in general will be great for stocks. He thinks it's going to be higher inflation than people thought, lower growth. You have a Fed that probably can't cut because you're in that lower growth environment, but you're also at high inflation, so they're not going to want to cut interest rates. Versus this part here that's still bullish is essentially saying, all right, tariff uncertainty is driving the narrative right now, making everyone very uneasy. It's driving sort of the data narrative. Companies are getting worried. But maybe once we get to the second half of the year, we start talking about some of Trump's policies that maybe are more beneficial. We're talking about tax cuts, maybe tax extensions, maybe further tax cuts. Maybe that takes hold in the second part of the year and the story gets a little bit more positive. But again, I think what the real takeaway here is, you look at this wide range of numbers, I don't really know if anyone has a lot of conviction right now, Josh.
Yeah.
It feels like a little bit of wait and see as we end the first
The other
quarter.
problem, two very smart guys. That's
Two
the
very
other
smart
issue.
guys
Yeah,
saying
very-
that they don't love stocks.
Very much.
Yeah.
Thank you, Josh. Appreciate it. Stick around. Much more As for a Trend right on the other side. TikTok nearing the April 5th deadline for parent company ByteDance to sell the social media platform in order to prevent a ban in the U.S. Yahoo Finance's Dan Howley joins us now with the very latest. Dan.
Yeah, Josh, this is the second time that the company has been up for a ban. The first time back in January, just before the inauguration, when it temporarily went offline on June 18th, then came back online shortly afterwards on June 19th. And then we had Trump sign that executive order extending the deadline for the ban till April 5th. And now that date is quickly approaching. There's reportedly a number of suitors that are looking to buy TikTok, including Oracle, and that's according to the information in Bloomberg. The issue here, though, is does it get buy-in from China? Do they say, sure, go ahead with this deal or not? Trump has floated the idea of easing tariffs if China agrees to sell or agrees to allow ByteDance to sell TikTok. A lot of this, value that TikTok has is obviously its users, but its algorithm as well, which keeps people scrolling and swiping and swiping and swiping because it keeps them hooked over time. And so there's a lot going on here when it comes to the ban itself. Frankly, there's a lot of wiggle room. There's the idea that perhaps President Trump can see a kind of change of hands and say that it satisfies the terms of the ban or of the law. This really isn't necessarily a ban on TikTok itself. What it does is it outlaws cloud providers as well as app store owners like Google and Apple from hosting the app past the deadline. If they don't, then they're fined, and that means that TikTok basically goes offline, and that's what happened previously. But April 5th is fast approaching, and President Trump says that we'll likely see some kind of sale or action beforehand.
Could Trump do another extension, Dan?
Yeah, I mean, he could. There's still a lot of questions around that and what that might mean, but we could end up seeing this extended again, yeah.
All right, Dan. Thank you. Appreciate it. Here are some stocks to watch in after-hours trading. Shares of PVH are soaring. It's after reporting earnings. The parent company of Calvin Klein and Tommy Hilfiger posted better than expected results for the fourth quarter. And for its outlook, the retailer's full-year adjusted earnings did top analyst estimates and also see sales growth to be flat or slightly positive this year. Now take a look at shares of Live Nation, the parent company of Ticketmaster, under pressure here. Reports saying President Trump is set to sign an executive order targeting ticket scalping and changing the live events ticketing industry. That order reportedly directs the Attorney General to work with the Treasury Department and Federal Trade Commission. That move follows the president's calls on the campaign trail to make changes to this industry, especially after the chaos around buying tickets for Taylor Swift's Eras tour. Well, that is a wrap on today's As for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the very latest market-moving stories affecting your wealth. Have a great night.